Welcome, everybody. Thank you for bearing with us. This is our first time via Zoom and in person, and I am loving it. Just took a little bit of technology to work out. I'm Amy Corey at Western Title and Escrow. I'd like to take some time to have my
Can't hear you very well.
My fellow teammates introduce themselves. I'm Cheyenne, Rick, and Amy. If you guys want to just introduce yourself.
Hey guys, I'm Cheyenne. I think I know almost everybody here. I've been Western Title for 3.5 years now and love it. That's gonna be happy to have you guys here Thursday.
Rick Scarborough, also with Western. Welcome and good to see everybody.
Good morning, everybody. Amy Drennan with Western Title. Thank you for being here today. So good to see you all in person.
So one of the things we set on your table, we set a couple flyers of some tools that we offer. Western Power Agent One and Western Profile. Check these out. If you are interested and have not yet been signed up, contact one of us, Rick, Cheyenne, or myself. We'll get you signed up. Also on the back is our buyer and sellers booklets, and also our new moving guide that everybody has been all over. They want those. So you guys know CEs will be sent out hopefully later today. You'll be seeing them in your email. They'll come from Cheyenne, Rick, or myself. And via Zoom, they will also be sent out to you. They may be in your email by the end of the class. We're working on that in the back of the room. I want to take some time and thank Jeff for joining us. Jeff is from Northwest Reverse Mortgage. Jeff Foody. He has been in the industry since 2002, right? Okay. And called one of the country's foremost experts in reverse mortgage and frequently presents the benefits to large audiences. As of 2019, he's the proud owner of his own reverse mortgage. Like I mentioned, Northwest Mortgage. So I'm going to turn it over to Jeff, and I apologize for getting a little late start, but I'm sure everybody will hang in there yet.
I appreciate it. Thank you. So I'm glad to be here. I appreciate the opportunity to be able to talk more about reverse mortgages. I don't have a PowerPoint presentation. I don't have a plan. I mean, after you guys have been on Zoom for so long, you could just like read those at home. Like, why do you need to have someone presenting that? Like I said, I've been doing these for 20 years. I've never done a traditional mortgage. I know these backwards, forwards, inside and out. I don't know a thing about traditional mortgages. So I've done thousands of reverse mortgages. You will probably never meet anyone that has more experience doing these than I do. So my job here is just to give you information that is applicable to you. I don't have a these are all the things we're going to talk about. I want to talk about what you guys want to make sure that I talk about that's informational and helpful for you. So I've got a whiteboard. I want you to ask questions. I will answer your questions, and we'll make this pretty simple in a way that's applicable to you. So if we have somebody monitoring the Zoom, if you have questions at home, type them into the chat, and then someone can raise their hand in the back and throw out a question, and I'll make sure that we answer those too. Has anyone had any experience with reverse mortgages? Good, bad, indifferent? Go ahead. How's it going? What's your experience been like?
Oh, I've got one.
Okay, well, good. All right. There's a plan. Thank you for being here. Good.
And I've encouraged clients to get them when it's appropriate, of course.
Awesome. Great. Glad to hear. Anyone else have any experiences? Buyers, sellers, anything? Okay. So why I'm here is these two numbers up here on the board. Okay. 51% and 37%. Every year, the National Association of Realtors puts out a generational trends report. And so these are the numbers for 2021. So last year, 51% of home sellers were baby boomers or older. 37% of buyers were baby boomers or older. So if you don't think that the reverse mortgage is going to become applicable into your jobs in the near future, the numbers would tell you otherwise. There are more people that are participating in buying and selling properties are baby boomers or older. Reverse mortgages are for people at least the age of 62. So this is a specific product it's a government-sponsored benefits program geared specifically towards seniors, and it works perfectly for what you guys want to do. So I have 3 objectives today. One, I want to change your perspective about what you think a reverse mortgage is. Second, I want you to come out here with a resource. And third, if you guys get what we're talking about, you'll be able to help pick up more listings. That probably doesn't make a lot of sense right now, but it will when we get to the end, I promise. Again, so is there anything in particular that you want to make sure that I answer as a part of the class? And it will come with some questions in advance that you want to think about. I'd like to know about the basics. What is a reverse mortgage? What are the costs? Anything in particular you just want to make sure that I cover? Go ahead.
I definitely want to hear about the cons of them as well.
Yeah, absolutely.
Okay.
Yeah, okay. Anyone else? Okay, this is interactive, so stop me at any point. If I apologize in advance. I talk quickly. I'm from Jersey, and so we have no filter, so nothing slows us down with the words coming out of our mouth. So if I get to, again, I get excited about talking about these two. So by all means, if I start going through and you have a question, feel free to flick a pen at me and tell me to slow down. I'm perfectly good with that. So we'll start with the basics. What is a reverse mortgage? Okay, I'm sure that when we start off with reverse mortgage, there's one thing that I always have to do first, is I always have to draw a delineating line in the sand. Okay, so 2017, how long did you take out your reverse mortgage? Has it been since 2017?
2008.
Okay, whole different ballgame. Okay, all right, so 2017, they made some changes to the reverse mortgage program. Anytime that I talk to clients or financial advisors or CPAs or attorneys, anytime they say, well, I've heard about, I was clear, okay, what was it before 2017 or after? What the program was like before 2017 was borderline subprime. Okay, it was basically it was considered a loan of last resort. People who did them back then, it was high closing costs, high interest rates. They got a ton of money up front. It ate up a lot of equity. It was a relatively scarier product. What it is today is an entirely different ballgame. So it went from loan of last resort to financial tool. Okay, and what it's used for today is incredibly different. So I always draw a line in the sand and say, whatever you've heard about before about reverse mortgages previously is an entirely different ballgame. Because sometimes if you're going to talk to a client and you're going to suggest, hey, maybe you should think about a reverse mortgage, they're immediately going to come back and go, no, I've heard horrible things. But that's why I always say line in the sand, 2017. So let's get into the basics. If I stand over here, can I still be seen on the camera?
No.
No, all right.
Not yet.
Okay, well, I'm just gonna draw on this and I'll walk over there. No one needs to see me anymore, you're fine. Okay, so let's talk about traditional mortgage, just so everyone has that base point, right? So let's say we buy a $600,000 house and there's a $300,000 mortgage on it. Okay, now let's just pretend you never refinance, never sell, you actually abide by the terms of the 30-year loan, which I know never happens, but let's just pretend, okay? At the end of 30 years, how much do you owe?
Well, zero.
Zero, right? You pay the whole thing off, right? Trick question. How much do you actually pay during those 30 years? Right, astronomical, right? I'm gonna move my cons down here. I'll make sure they cover those. I'll just make sure we cover those. You end up paying back like more than double of what you originally borrowed, right? Does that make sense? We all do it. That's a part of the loan program, right? It doesn't really, and when you're making your payments in the early stages, most of it's going towards mortgage interest. It's for the privilege of having the loan, right? You're not even making any headway on the loan. But why do we do it? It's tradition. That's what everybody's done. You know, my parents did it. My grandparents did it. I'm going to do it too, right? But that's the way we think about traditional mortgages. The reason that it's okay is because you're acquiring an asset, right? The asset is going to appreciate in value over time. 30 years down the road, you know, this may be a $1 million house for all we know. I apologize for the chicken scratching for people at home. I know you can't see that, but this is $1 million over here. We're okay with that because we're acquiring this asset. And it doesn't feel like we're paying this much over the length of loan, because we're making a little payment every month, right? You make a little payment, goes towards principal, a portion goes towards interest. In the early stages, most of it's going towards interest. At the end, most of it's going towards principal. But that's a traditional mortgage, and we're all kind of comfortable with how that works. So here's a reverse mortgage in comparison. $600,000 house, $300,000 reverse mortgage. You don't make monthly mortgage payments on a reverse mortgage. So 0 payments. What you're doing though is you're deferring the interest. So interest is getting added to the loan and the balance just grows. So 30 years from now, you may owe 600 grand. The only difference is when do you make the payments? Rather than making a little payment every month, you're deferring the interest. And the interest is adding to the balance, and then at one point down the road, they're gonna make a payment back on all of that money. Usually, it's when they pass away and the heirs get the house, they sell the house, they pay back that money, and they get to keep whatever's left. That's a reverse mortgage in a nutshell. I'm done. No, there's a lot more to it than that, obviously, but that's all it is. If you just think of it like a 30-year fix where you're deferring the interest for the rest of your life, and at some point it's getting paid at the end. That's it. You still own the title. It's still in your name. You can refinance it. You can sell it. You can pay it off. It's just a mortgage like any other. It's just when do you make the payments? Now, when we're younger and we're in the workforce and we're making money, making the payments every month, we're fine with that. When you're 70 years old and you're living on Social Security, why are you making a mortgage payment? Right? Most of them can't afford to make a mortgage payment. So that's the generic. Oh, and the same thing. Now, the other part is, well, why is there a fear about reverse mortgages? My numbers back up here. I'm going to talk about a con for a second, then I'm going to come back and circle back on more of those. People say, well, why is reverse mortgage a bad thing? What's the negative to a reverse mortgage? Well, the balance is growing over time. It's a negatively amortizing loan. You're not making payments, so interest is just adding to the loan. Well, what happens down the road, right? Most people look at this part of the equation right here. The mortgage balance is growing over time. And that's a negative thing. But they don't look at the other part. You still have an asset. An asset is still appreciating in value. That hasn't gone away. The risk is, what if the house doesn't appreciate in value? What if it goes down? Okay, well then you're eating into the equity. But that's the same as any type of mortgage. If the value of the house goes down, you're eating into the equity. Right, so. Okay. Any questions about any of that? That relatively makes sense? Sort of, go ahead.
Well, what happens if the, say the home goes into like a 2009 situation where it actually crosses over?
Great question. So these are an FHA loan. So this isn't a bank program. It's not my money, right? It's all FHA. Good and negative. There's positives and negatives to FHA. Okay, one, it's FHA insured. If the balance continues to grow and the housing market tanks, FHA eats the difference. You can't pass on the debt to your heirs. So the worst case scenario is that there's no equity left. It's relatively improbable for that to happen, but you bring up a good point. If I did a loan in 2002 and the borrower passed away in 2009, the housing market was in the toilet. That happened. People were upside down. But the difference is with this loan, even if we go into a recession today, the borrowers get to still stay in the house. They don't have to pay it back even though there's no equity. They still get to keep the home. All they have to do is live in it, keep up the taxes, and keep up the insurance. So they can live in there forever, even if there's no equity left in that house. So the positive of FHA is the insurance. The negative is you pay for insurance. I'll get to that later when we get to the closing, to the cost of doing it. But this is the big negative to reverse mortgages. There's two big, I'm here right now. Let's go to two big cons, okay? The two big negatives. One is the fear of the unknown. They have no idea when they're gonna pass away, what the balance is gonna be, what the home is gonna, no one knows, right? That's a complete unknown. So what if the housing market tanks? What if the value's gone up? What if they pass, what if they live till they're 110, right? Nobody knows how long that's gonna be. The other negative is the cost for mortgage insurance. If you compare this to a traditional mortgage, this has a 2% of the appraised value of the house for mortgage insurance. So if you're looking at a $600,000 house, it's $12,000 for mortgage insurance.
So
It's a pricey, that's a hefty price tag.
question, it's 2% of the appraised value. but not at the loan amount. is that
Not the loan
correct?
amounts, on the appraised value. Right. So, again, there's advantages, there's positives and negatives to the reverse mortgage, like anything else. The mortgage insurance cost is the biggest negative. Anytime we're talking about with clients, you've got origination fees, you've got third-party fees, those are pretty normal, but then when you tack on that 2%, it becomes a lot more expensive. And that's usually the big number. So let's get back into some more of the basics here. I'm gonna come on this side so I can write with my right hand. Okay. So you have to be at least 62 to qualify. Okay. The amount of money that you qualify for is based on their age. It's off mortality tables. The younger they are, the less money they get. The older they are, the more money they get. Okay, so a 62-year-old is going to get like 40%. So let's say 75, they're going to get about 50%. We'll keep the math easy, 50%. So let's say they have a $600,000 house. I'll try to write this larger for those at home, which means they're going to qualify for about 300 grand. Okay, that's already factoring in the closing costs. Okay, all of the costs to do the loan are already factored into it. So they just decrease the amount of money available. So they're really qualifying for like 54%. They just decrease the amount available. So this is the actual funds available to them. And I always like to use 50% as a rule of thumb, but it all depends on the age of the borrower. So they're going to qualify for $300,000.
What was the age that 50% qualified?
About 75. Okay. So they're going to qualify for $300,000. If they have a mortgage or a lien against the property, it has to be paid off out of that fund. So let's say they have a $200,000 mortgage and they're making payments on it every month. The reverse mortgage comes in, we take their 200 grand to pay off their existing mortgage. So now they don't have to make mortgage payments anymore. There's an extra 100 grand left over. I'll draw a little chart here for a second. The reverse mortgage has an awesome feature. This is where this has become a financial tool. The extra funds, so I'm assuming here they have a $200,000 mortgage. Don't worry about it at home, it is small, but even if you're here, you couldn't read it anyway. So we'll, it's really bad handwriting. So if they have, most of our clients have a mortgage and they're in their mid-70s, they just don't want to make the mortgage payment anymore. I'll give you a quick statistic. 87% of people that go into retirement with a mortgage die with a mortgage. The idea of people paying off their mortgage in retirement, it's a myth. It doesn't happen very often. Very few people go into retirement living off their retirement savings and continue to pay off the balance of their mortgage. They usually just maintain the mortgage for the rest of their life. So if they're in their mid-70s and they're living off a fixed income, why are they making mortgage payments? I would make that argument, but anyway. So back to my scenario here. They have a $200,000 mortgage. We wipe out the mortgage. There's an extra 100 grand left over. The main reason that people do reverse mortgages, one, is to get rid of the mortgage. Two, is to free up some of the equity. Right now, home values have been skyrocketing year after year after year, right? It's been an awesome place to be, great market. There are seniors who are living on a fixed income that are asset rich and cash poor. Just because their house is worth 800 grand doesn't mean you can take an appraisal, walk into the grocery store and put it down and say, here's how much money I got. The only way that you get equity out of your house is to sell it or take out a loan, right? So this loan, they don't have to make payments back on it, which is the big attraction to it. The money from the reverse mortgage, they can use for anything that they want. If they want to take $1,000 a month to supplement their income, great. They want to go buy a 56 bed, great. You want to use it as investment property, you go buy some property down in Arizona, would sound great on a day like today, right? Do it. Well, they can do whatever they want with the proceeds of the loan. It doesn't affect Social Security, it doesn't affect Medicare, you don't pay taxes on it. So for somebody who has zero mortgage, they could open up a $300,000 line of credit. Now, you're familiar with lines of credit from the bank, traditional HELOC, right? They're usually good for a specific period of time. 7 years, 10 years, somewhere along those lines. Anything that you borrow, you got to make payments back on it, right? And the reverse mortgage line of credit is different. It's set up for life.
It's open-ended.
It's open-ended. It will, and it actually increases. Right now, interest rates on reverse mortgage are about 5.25%, which is exceptionally high on reverse mortgages. They're never that high. They're usually about 4 or 4.5. So this is an obnoxious market. Question?
Yeah, I've got a couple on Zoom whenever you have a chance.
Okay, sounds good. I'll finish this thought and we'll break it up.
Sorry.
Now, so I put this in 2 buckets. This is how I explain to my clients. You got 2 buckets. You've got used money and available money. Okay, if used money is money that you have to use right off the bat to pay off the mortgage. If you don't have a mortgage to pay off, everything's in your available bucket. Your available bucket grows. Okay, this is the part that's a little crazy. It grows at 0.5% higher charged over here. So that means that this $300,000 line of credit is growing at 6.25%. Let that settle in for a second. They can access equity in their home and the line of credit grows at 6.25%. And it's set up for life. It doesn't matter what happens to the housing market. There's no investment right now that's doing better than that. I'm getting phone calls almost every other day from financial advisors who sees the marketplace and they see people's retirement accounts going like this with the market. And they're saying, well, how can I get something that's going to be able to have access to equity that's going to increase forever? It's a phenomenal tool. Again, my line of delineation, before 2017, loan of last resort. After 2017, man, this is an awesome financial tool. Wait till I get to the purchase part of it. Okay, what are the questions?
And you may have answered, so can the mortgage insurance be folded into the RM rather than?
Yes. All of the fees are paid up into the cost of the loan. The only out-of-pocket expense, there's 2 out-of-pocket expenses. One, there's a consumer protection on reverse mortgages. A borrower has to talk to a neutral third-party counselor before they do a loan. So there are a couple of companies across the country, they're approved by HUD, approved by AARP. I'm good at what I do, but I'm still a salesman, so there's only so much we can be trusted, right? So the neutral third-party counselors are so that they can get independent information outside of me to know that they know what they're getting themselves into. Okay, I have clients in their mid-90s. They want to make sure they know what's happening, no one's taking advantage of them. Again, this is a highly regulated program geared specifically toward a protected class of citizens. So counseling has to be done, it's about $125. That's the only thing out of pocket. There is an appraisal. Sometimes the appraisal can get wrapped in, sometimes it doesn't. All depends on the market conditions and the appraisers. So that's the only thing that may also be on there. What's the next question?
Next question, if you have a RM, is there compatibility with the living trust for heirs?
Sure, yeah, so reverse mortgage is like anything else, just a loan. If they've got a trust, they can do it in the reverse mortgage. As far as the ownership of the home, still the same as any traditional living mortgage. So there's no problems at all with wills or trusts, anything like that. They're simple.
The next question, the combo of different age spouses,
Great
i.e. one
question.
over 62 and the other not.
Great question, thank you. So prior to 2017, so let me take a step back. If you have a 58-year-old and a 62-year-old, or let's say a 62-year-old and a 65-year-old, they base the percentage of what you qualify for in the age of the younger borrower. Okay, so if you're 62 and you're 75, they're going to base it off the 62-year-old. If they're married and one is 62 and one's 58, before 2017, the 58-year-old was left off the loan, left off the title. They had no ads. There was so many lawsuits that FHA had to deal with for that. So part of 2017, they created what's called a non-borrowing spouse. So the 58-year-old wouldn't be on the loan where they could take out money and everything, but they would still be on the title. And in the event that the older borrower passed, they could still stay in the home for the rest of their lives and not have to make mortgage payments. But I have to tell you, there are stipulations for the non-borrowing spouse. One, you got to be married, and 2, you have to be at least 18. Because you got to travel with me somewhere, right? So I shared that in a class, and there was a guy who was a realtor, he was 80 years old, and he goes, "Well, now I got to update my Tinder profile." First of all, props to you for knowing what Tinder is, right? But second of all, saying, "Well, now I can get a younger spouse," and good for you, man. All of you. Anyway, 80-year-old Tinder. So now you're really paying attention to what you're looking at. Any other questions back there?
Just got one. Can a purchase be made with a reverse mortgage?
You betcha.
when there is a large down payment?
You bet. I'm gonna get to the purchase in just a sec, because I know that's the meat of what we're talking about. I wanna make sure you kind of get, again, first thing I want you to change your perspective about what reverse mortgages are, right? They are just a loan like any other. They're safe, they are FHA, they're government insured. The borrowers are gonna keep, there's still gonna be a substantial amount of equity in the home. So let's talk about this for a second, and then I'll pivot over to that. Okay, so let's say there's a $600,000, you gotta look at this like a balance sheet, okay? Let's say you have a $600,000 asset, and you've got a $300,000 liability, okay? And just to keep the numbers in our head, let's say the interest rate is 5%. Okay, so the balance of the mortgage is grown at 5%. Now, the math on this isn't that complicated. What does the house have to appreciate in value to offset the interest that's accumulating against the loan? Well, if it's twice as much, it's got to grow at about 2.5%. As long as the asset grows at 2.5% and the mortgage grows at 5%, you're going to have the same percentage of equity over time. But you don't have to make payments on it. Right? The risk of a reverse mortgage is, what if this grows at 2%? Or what if it goes negative? That's when the risk of the reverse mortgage is that it could eat into the equity. But let me finish this last thought. Fast forward to the end. Okay, now they're $300,000. Now they owe $450,000, and then they pass away. The house goes to the heirs, and the heirs have a choice. What do they want to do? Well, what's the house worth? Well, if the house is still worth $600,000, they could sell it, pay back the reverse mortgage, and they keep whatever equity is left. Or if they want to keep the house, take out a $450,000 loan, refinance the loan. They can take over the house, make payments on it. It's not, the other thing is, they have plenty of time to figure out what they want to do. Once the borrower passes, the heirs have about 12 months to figure out what they want to do. So again, this is not a bank loan. This is a government loan. They're not that efficient, right? If they find out that someone's not in the house anymore, they got to get time to be able to foreclose on that property. They're not very quick at that. So the heirs will have plenty of time to figure out what they want to do with the loan. Okay, so we've been talking all this time about the refinance. Okay, I'm going to keep the same percentage. So we're going to say 50% equity, 50% loan. Okay, so I'm going to keep those numbers in your head. So let's say that you have a borrower. I just came from Sisters yesterday. I was doing a class out in Bend, and I just came from Sisters, Oregon. They sell a piece of property for $300,000 in Sisters, and they move up here because they really like Eugene. I have $300,000. What have you got for me? Anyone got anything? Right? No. Traditional wisdom is, okay, well, maybe I find them a more expensive house. They use the cash as their down payment, and I help them get a loan for the rest of the amount. That's what a reverse mortgage is. A reverse mortgage can be that loan. So let's say you've got $300,000 in cash. That's a horrible zero. Okay. You've got $300,000 in cash, which is the same thing as equity for the refinance. So for the purchase, they have $300,000 in cash. You can give them up to $300,000 for the reverse mortgage. They can buy a $600,000 house and not have a mortgage. You can double their buying power, and they don't have any mortgage payment.
You just need roughly a 50% down payment.
Roughly, yeah, it depends on their age. Again, the percentage is going to change.
The
but
age and the interest rate.
Right. So if they come to the table with $300,000 and they say, well, what have you got? I say, well, I don't have much. I could probably find you something nice at about the 600 range. I'm like, okay, well, now we're getting a $300,000 loan. I'm sure none of you ever experienced this before, but qualifying for loan isn't easy for everybody. It doesn't always work. They don't always qualify, right? So if you're 75 years old, you're living on Social Security, what kind of loan are you going to qualify for? Probably pretty minimal. But with this loan, again, at a couple of points that I should have mentioned earlier, I apologize. To qualify for a reverse mortgage, It's not like a traditional mortgage where you have to prove you can pay back the loan. Normally, when we all go get mortgages, we'll look at our income, our credit scores, our credit history, our debt to income ratio, blah, 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 because we have to prove that we can make the payments back on the loan every month. The reverse mortgage, none of that applies. They don't care about the income or credit scores. None of that matters. Because with this, the loan's against the house, not the borrower. So the borrower doesn't have to qualify. All the borrower has to do is there's a financial assessment tool that you go through with every client that shows that they can keep up the taxes and insurance. That's it.
Would you address creditworthiness on that too?
Yeah, same thing. That's all a part of it too. So creditworthiness comes in is they have to look at your willingness and your capacity to keep up your taxes and insurance. If they pull up your credit score and see that you've had 2 bankruptcies and you haven't kept up, you're going to say, well, this person's probably not going to keep up their taxes and insurance. They can still do a reverse mortgage. It's just the percentage of loan amount will decrease because they'll set up an impound account for the taxes and insurance for the people that don't. So I'll come back to you just a second. So when they're qualifying for a loan, they're trying to buy a house. This loan can give them to 50%, no mortgage payments, no income or credit qualifications. This is the simplest loan in the world for a senior to qualify for. So the flip side of this is, let's pretend that you're representing a seller. And people are making offers for you on that house. And you get conventional, reverse mortgage, cash. Which of those do you take? It's a trick question. You always take cash. Right? So if you just a reverse mortgage or traditional financing, which do you pick? If you see someone makes an offer on reverse mortgage, that's the one you take. Because there's no inability for the borrower to not qualify. As long as the house meets FHA standards, you take that offer.
So how long does it take to close the transaction?
30, 45 days.
So the same.
Yeah, about the same. It depends on how, the only difference is it's an FHA appraiser. So maybe sometimes they're a little higher demand. Right now, they're not. It's about 30 days. We can get it done actually faster than that in some circumstances, but it's about the same.
So I have taken classes before about this. I always haven't had time, understanding how that works.
Of course, it's a whole different mind
Right.
shift.
Because you're saying like it's 50%, for example, like you had to have 50% of down payment, right? To do
Right.
that. And you had to be 62
Right.
and older to do that.
You got it.
So if a person doesn't have 50%, even if they're like seniors, they're not able to qualify for the loan.
Right, they have to have a certain percentage of money, either money to put down, or if it's a refinance, they have to have a certain percentage of equity in their home.
And that depends, how much, the property costs as well.
Right, because it's based off of the appraised value, of the value of the house, and then their age, and then it determines the percentage. Right.
And how does that work? Because, so if the house is $600,000 and the buyer has $300,000, and they're like, I want to do a reverse mortgage. So even, then at 62, some people make a ton of money, some people. So like, how did that, doesn't make sense for me, like telling the client, you're not going to make a payment. How do I convince a buyer, the buyers, like, so, hey, it's better for you to, to do this instead of the other one, because you're not gonna make, mortgage you're just gonna have it like. So
I get what you're going with that.
That's the one that I kind of like wanna like.
The simple answer to that question is you don't. Like, you don't. There's no way that you're gonna convince a person that this is a better option for them.
Right.
I can't. Say, listen, I want you to hear through this angle. If it works, great. If it doesn't work, fine. But I don't expect you to be an expert. I've done thousands of these. I've talked to every kind of client and talked through, for some people, they want to know the nitty-gritty details. Some of them, they just want to know the benefits. It's an entirely different sale. All I ask is that they say, okay, let me learn a little bit more about it. And then on my website, I have a 7-minute animated video that explains what a reverse mortgage for purchase is. Just share the video with them and say, look, just get some information. There's a lot of skeptics when it comes to reverse mortgage, which is why I always draw that line in the sand. What it used to be and what it is today are two very different things. So I say, be willing to get information. I run TV ads, radio ads, newspaper articles, just trying to educate. That's 80% of my job, which is why I'm doing this, is to educate. Once they have the information, most of them will say, well, I see how this makes sense. Go ahead, and we'll go to those questions.
I'd like to address that. You know, there are no payments required on a reverse mortgage, but that doesn't mean you can't make payments.
Great point.
You
Thank you.
can actually get the reverse mortgage, lock it in at age 62, and then make interest-only payments, amortizing payments, irregular payments, spotty payments, no payments. It's completely flexible.
Right.
So that the party who has got the loan, if they want to, well, you know, I don't want to see that ratcheting out, but what happens is you can make the payments, just don't pay the loan off because then that cancels it. And then later on, when their financial situation changes, so they have less money, they can stop making payments or they can reduce the payments. And in the meantime, because of, now what is the increase in the amount of money that's available
The
to
line of
them
credit.
means that they can go back in, if I'm correct, and borrow it out again without increasing their monthly payment, because there is no required monthly payment.
Right.
It's absolutely flexible. in that
Key word
respect.
there being required, right? Unlike traditional mortgages, you have to make a mortgage payment every month. With this, mortgage payments are optional. So think of it like a 30-year fixed loan that defers the interest rate, and mortgage payments are optional. They can if they want. Got yes, I know we have some questions waiting back there.
Yeah, I got quite a few.
Great.
Can you, and you may have answered them in the meantime, I'm just
No
gonna go
problem.
back to where can you pay off the reverse mortgage at any time?
Yes,
Okay.
and there's no prepayment penalties. You can pay it off at any time.
What if the borrower has to move out and into a care facility?
Can we come back to that one? Keep going.
Okay, I'm gonna unmute myself again so they can hear the question. Sorry. Can you lay out an age scale for how much percentage reverse mortgage one would qualify for?
Oh, there's always one in every crowd. That person's an engineer, I can guarantee it. No. Yes, I can. Will I? No. You can shoot me an email. I'll be happy. I'll show you the whole spreadsheet. I'll give you the contact information. I will give you the entire spreadsheet from HUD that shows you the PLF guidelines. It's a lot of information. We're not going to go through it today. But for those engineers out there that want to know, absolutely. Send me an email, I'll give it to you.
Okay, and Dean is asking, can we get the link to the animated video he just referred to?
nwreverse.com.
And I will send that in the wrap up
Yeah.
email. Next question is, are commercial properties eligible?
Nope, it's got to be. Thank you for that question. Let me follow up on that one. It's an FHA loan, has to be FHA guidelines. So owner occupied, single family residence, you can do manufactured home if it's built after 1978. As long as they own the property underneath. Can't do floating homes. You can do a condo as long as it's FHA approved, or you can get a spot condo approval. So same tradition, same FHA standards.
Okay, the next question, can a buyer choose to use only a portion of the equity from the scale, pay 50% down and bank the balance of the equity to pay taxes and insurance because their income is limited and they are coming from a lower tax
I'm following you.
area?
Yeah, I'm following the question. So here's,
Okay,
let me, so let's take that a thought further. So let's say our client and sister sold their house for 600 grand. I'm really getting difficult to reach here, aren't I? Let's say they sell for 600 grand. Okay, and they come to Eugene and they want to buy a house and they've got 600 grand in cash. They don't have to use all of it, right? You can just use 300 grand of your cash. Let the reverse mortgage make up the rest. You can buy the $600,000 house and you still have 300,000 left over from the sale of the house. The percentages are what they are. How much they choose, you can go above and beyond that, or you can go lower than that if you want to. If you want to put more down because you're not quite at 50% and they want to put more down, or if they have more cash, like this situation, they've got 600 grand in cash, but they only want to use 300 because they want the other 300 to put in their nest egg. Absolutely, you can do that. I think that's where the question was going. So anything else on there? Or we want to circle back on those?
Nothing else at this time.
Okay. Was there a question over here somewhere?
You answered.
Oh, okay. You have one
Is
too?
there an income limit? Like, what if they make a bunch of money?
Nope. No, I have clients that are millionaires. That I've got a guy in Malibu, has a $4.6 million house, owns it free and clear. He did it he opened up a reverse mortgage just to get a line of credit. I can tell you the last 100 loans that I've done, there's 100 different reasons why they did it. I got a guy from Lake Oswego, had an $800,000 house, took out a $400,000 line of credit, bought a piece of property out in Forest Grove, subdivided into 12 lots, spec built one house out of the line of credit from the reverse mortgage. So he financed it, didn't have to make payments on it, took him about 1.5 years to build it, sold it, put it back into his line of credit, then built the second one, then built the third. He just self-financed with his reverse mortgage. I'm telling you, it's crazy. Here's another one. This is, I think, one of your alley. This was about 6 months ago, and the market was a lot different than it is now. But it is a $1.2 million house, and her husband passes away. She doesn't want to live in this big house anymore, so she's trying to sell. She finds herself a little $500,000 house. And she's trying to make offers on the house, but it's contingent upon the sale of her 1.2. Anybody in this room, would you take that deal? Like if you've got multiple offers and someone's making an offer contingent upon selling a $1.2 million house, no one's taking that deal, right? She tried and tried and tried and kept falling, it just would not get anyone to take her offer. So we did a reverse mortgage on her primary residence. We gave her $600,000. Now she's a cash buyer in this market. So she went and put her cash offer on a house of $500,000. Now that's her primary residence now. So the reverse mortgage is called due. That's okay, she's selling it anyway, right? So we used the reverse mortgage to allow her to be able to, in this market, on her current house, pull out the money and then use the money to go buy another piece of property. And when you go on the website, you'll see I actually did an interview with one of the TV stations about this exact scenario. We talked about how this works with this one. Okay, stay. I want to talk about this one real quick. It has to be their primary residence. Okay, if they vacate the property, I'm going to give you the black and white, and then we'll talk about the gray. Right, the black and white. If they vacate the property for 12 consecutive months, the loan can be called due. The reason for that is if someone goes to a care facility and they're there for 12 months, statistically speaking, they're not coming back out again. So that's the way the rule is designed. Now, how do they know if someone has vacated the property for 12 consecutive months? Again, government, not that efficient. What they do is they send out a letter every year on the anniversary date of the loan. Are you still living in the house? Reply back yes or no. Check yes or no. Yes, send it back to them. As long as they get the letter back, they leave them alone. Seriously, really complicated, right?
It is under penalty of perjury.
Well, there's always that too, right? But that's how efficient they are. Well, here's the thing. So I did one for my stepfather. So my stepfather was substantially older than my mom. And we did a reverse mortgage because he had dementia. And if anyone's familiar with that, familiarity is everything. Once you take them out of the home and put them into a care facility, they go downhill really fast because they're not familiar with anything around them. So we did a reverse mortgage to pay for in-home care. And he was there for 7 years with the reverse mortgage paying for in-home care. Then we had to put him into a care facility. And I know the rules. I know 12 months, right? So on Father's Day, we took him out of the care facility and brought him home. Stayed home for the weekend. Put him back in the next day. 12 months starts all over again. So there are, the rule is 12 consecutive months. But the rule is in place in the event that they're vacating the property. It's no longer their primary residence. And then when it is, and they've vacated it, the heirs still have 12 months to figure out what they want to do to sell it. Okay, I want to share with you a quick story, and then we can kind of wrap up with any questions. So this is the part, go ahead, before I get
Can
my.
I just ask, so in the scenario with 1.2 reverse, use the cash, then does she have 12 months to sell?
Yep. And then and as long as it's on the market, they'll give her extensions. Like if they see that she's trying to make an effort to sell it. My mom was in the house for 3 years after my stepfather passed. Because he passed away in 2009, the market was upside down. And they gave her extension after extension after extension. She was there for 3 years without having to pay mortgage or property taxes or insurance. So it ended up being a pretty decent deal. Okay, so here's the part that I want to drive home. Okay. I had a client in Lake Oswego. At a $550,000 house, they had a $225,000 mortgage. They were paying about $1,200 a month on their mortgage payment. They had $325,000 in equity. Okay. Husband and wife live together, living off Social Security. Husband passes away. So now the wife just has $1,700 in Social Security, trying to live in this big house. Does that make sense? $1,200 mortgage with $1,700 in income. No, it doesn't make any sense at all. So she went to a realtor and the realtor said, it was a hot market. Again, this is a couple years ago, there's nothing like us, so we go at that number anymore, but she said, well, let's go ahead and sell it. And she was afraid to sell it because of this. She figured, I'm only gonna have 325 grand. What can I buy for 325 grand? If I only have 1,700 bucks in income, who's gonna qualify me for a loan? So realtor went and talked to her mortgage broker that she had a good relationship with and said, okay, what options do we have? And she said, well, I could get her $125,000 mortgage with about a $700 a month payment. Okay, so they found her a $450,000 house, and now she has a $700 a month mortgage payment. Job well done, right? She's in a better situation. The realtor gets the sale here, gets the purchase here, and puts the borrower in a cheaper mortgage. I think most realtors would look at that and say, yeah, that's a good job. I had just completed a reverse mortgage for that mortgage broker's parents. And she said, well, what would a reverse mortgage look like? So she went back to the client and said, hey, what would you consider a reverse mortgage? No way. Heard horrible things about them, don't want nothing to do with it. I said, why don't we do this? Let's meet in the office, bring the realtor, bring your financial advisor, bring your kids, bring Santa Claus. I don't care. I will help explain to everybody. So we sat down. I said, okay, here's what I would do. Take your $450,000 mortgage, a $450,000 house, sorry. Only have to put down 225 grand. The reverse mortgage will make up the other 225. And by the way, this has 0 monthly mortgage payments. Now help me out here. If we sell it for 125,000 and they don't want to use 100, they only need to use 225, there's still 100 grand left over. Right? Same house, same situation, no monthly mortgage payment. And now I've just made the financial advisor very happy because we just added 100 grand to her nest egg. So this is a good deal. This is a far better deal for the borrower situation. Now, here's the thing. Would anyone here would have ever thought about that as an option? No way. I've taught thousands of realtors. 99% of them would never have even thought about doing this. That's why we're doing this class. Again, the first thing I started off with was 51% and 37%. Seniors are going to become more people are turning 62 every day, right? So there's a massive, massive demographic of baby boomers hitting retirement age. And almost half of them are going to be buying and selling. You've got to understand how this product works. At the very least, have a positive understanding of it. And say, hey, it's not a terrible idea. Now, there are situations where it's not a good idea. If a borrower's going to stay in the house for 2 years or 3 years, bad idea. Why pay all those closing costs if they're going to get out of it 2 or 3 years? First question I always ask them is, well, what happens if you pass away today? What happens to the house? Well, if they're going to sell the house and divide it amongst their heirs, sure, great idea. If their great-great-grandfather built the house and the kids want the house, don't do a reverse mortgage. It doesn't make any sense. So I explained this exact scenario because we went back to the client. Again, the client in this situation was reluctant to sell because they had the fear of what else can I buy. They would have sold in the market. She knew she needed to downsize. She knew it was too big of a home, but she had this fear of, I don't know what else I could afford in this market. I taught this class in Madras. I explained how this works. A realtor in Madras sent out a postcard to all of her database and said, if you're a senior and if you had thought about listing in this market, but were afraid about what you could buy, give me a call and let me talk you through what our options look like. She got 4 listings in a week. Simply because she's educating them something that no other realtor is talking with them about, because most of them don't understand it. So let's go back to the beginning. I said there's 3 things I wanted to accomplish. Change what you thought about what a reverse mortgage is. Yeah, done. A little bit different than we thought it was. 2, you come out with a resource. All my information's back there. Email me, text me, call me. I'm happy to be able to answer whatever questions I can. And 3rd, it's a way to be able to pick up listings. Educate your database about what reverse mortgages are, that they're not as scary as they used to be. This is a federally sponsored benefits program. It's a safe, it is reliable, it's expensive, but it is a great product for the right people, and most people don't understand. Go ahead.
Okay, a word from our sponsor here. All right, my primary batch of prospects are my age cohort, you know, in 70s, 80s, some 90s, very few, as you can well imagine. But whenever I get a buyer who's in the over 62 age group and they're a little bit shy on funds or income, first thing I do is look at that reverse mortgage for purchase. Because, and most realtors, now yourselves are out of that category, most realtors don't know anything about reverse. Well, I've heard horrible things about those. And the bank takes your home.
Yep.
That's
my
my favorite one. The bank will take your home. Tell me this. Who'd you hear? Well, I heard it from my wife's brothers-in-law's hairdresser's sister. I mean, that's who to rely on. Don't rely on that kind of stuff. Go to the source, somebody who knows what the hell they're talking about. And I think reverse mortgages are a wonderful tool for all the reasons you said. And occasionally it's not good for somebody, but if you just have a blinder on and you never see it, you never get a chance to find out.
Information
Are they all 30-year products?
No, it's life. I just use 30 years as an example, but it's for life. They can do it at 62 and look at 110.
Right, but the rate is set.
Right.
When you do it.
Right.
And it just keeps going in. It's almost like, is there a life estate component to it? Is
No.
there? Okay.
By the way, do you want to travel with me? Classes, just do that plan for
Yeah,
the.
I've given lectures on reverse mortgages to the brokers at the Equinox. It'd be sort of like that French woman, Jean, somebody who lived to be 122, something like that. And the people that she had sold her home to go to when they died.
Yeah.
Wow.
You never know how long it's
More
going. It's
questions?
absolutely open-ended.
Okay.
And if the market goes down, the person which lives too long, let's say, in the house, and the value of the loan far exceeds the value of the house,
Doesn't matter, they could still live there.
nobody gets hurt in the family.
Right.
Nobody.
Can't pass on the
It's-
debt to
It's
the
picked
heirs.
up by the mortgage insurance.
We have more questions?
Yeah, we just have one question. I think, you just, if you can explain the fees again.
All right, sure, absolutely. So 3 fees. Third party, title, escrow, notary, appraisal, et cetera, those are pretty standard. There's an origination fee. That's where I get paid. It's usually anywhere from $2,500 to $6,000. Depends on the appraised value of the house. You cannot charge application fees or processing fees or underwriting fees and all of those junk fees that you normally have associated with traditional mortgages. Can't have them on reversals. So we charge the origination fee up front. That's the only fee that we get. Third party fees is your mortgage insurance premium. That's FHA, 2% of the appraised value. This is relatively normal expenses. That makes it way expensive. One thing I want to share with you real quick, because I think it's imperative to all real estate agents understand this concept. Topic, but when you close a reverse mortgage, so let me take a step back. When you have someone that's interested in selling the property, any age, whatever, and they come to you and say, I'm interested in selling the property, do you pull a profile report on the title to see what liens and stuff there are against the property? You got to kind of get an idea a little bit about the situation for the property before you list it? Sometimes, okay. On a reverse mortgage, there is a note and a deed of trust, just like every other mortgage. On the note and deed of trust, it says, this is the date of which you're going to repay the loan, and this is the amount of which you're going to pay. Nobody knows what those are in a reverse mortgage. So on the note and the deed of trust, they take the amount of money their borrower qualifies for. So let's say the $300,000. Doesn't matter if they take a line of credit, doesn't matter if they even use any of the money. They take the total amount and they calculate it out to their 150th birthday. So they'll say, you're going to repay $625,000 in 2078. And that's what it says in the note, and that's what it says in the deed of trust. Now, this could be a line of credit. They could owe nothing against it. But here's the other part. There's 2 notes and 2 deeds of trust. So if you pull up a prelim, it shows $686,000 first, $686,000 second. If you don't know any better and you pull up a prelim and you're like, man, they owe $1.2 million on a $400,000 house. I can't sell this. I've had realtors walk away from sales, from listings, because they pulled a prelim, they saw this and thought there's no way I can help them pay off their loan. So you've got to know that that's there, because reverse mortgages are messed up. Like, the government wasn't smart enough to figure out a note and deed specific to reverse mortgages, so they just kind of fumbled into the old ones. It doesn't make any sense. Anyway,
Just look at the monthly statement.
that would make sense.
That gives you the balance right there.
Last thing that I want to mention with you is, in this, I don't know how to say this before, typically, if you're good at what you do, you have mortgage brokers and bankers, people that you're associated with and that you work with. I am no threat to what they do. I don't touch forward mortgages. They probably don't do reverse mortgages. They probably, because that wasn't the case a couple of months ago. No one touched them before, but all of a sudden when the purchase slowed down and the refinance rates went up, all of a sudden people are starting to dabble. And that's okay. I'm all for people. I want my competitors to be good at reverse mortgages. I want them to understand them. But you should know, on purchases, 100% of them are audited by HUD. 100% of reverse mortgage for purchase are audited by HUD. That's not the file you want somebody playing with. There's a whole different ballgame. And you've got a definitive time frame of when it has to be done. The underwriters are way strict. They want to make sure every I is dotted, every T is crossed. Don't make sure that someone knows what they're doing on the reverse mortgage for purchase. It's a whole different ballgame. That's it. That's all I got. Any other questions? Anything else outstanding on the?
No.
Sweet. All right. Well, thank you. Appreciate y'all being here.
Yeah, that's the thing. You know, the CE, we've been back here trying to enter them as before the class ended, and there's been a little technical issues. So if you happen to get a CE, another that you RSVP'd again to the class, and it's a different time, why? Because we may have to re-enter it, create the class for a different time, because they need to be submitted before the class ends. So just so you know, if you see something in your email, we're not doing the class again, we're just having to recreate it in our database. I want to let you all know, we will have Western Ed Wednesday, October 19th, at Refinance Options to Help Buyers and Sellers in Today's Market by Dan Mickel, VP of Willamette Valley Bank. We will be here and via Zoom. Those on Zoom, we'd love to see your faces here in the room. We have lots of pastries in the back. And just want you guys to remember to, on your next transaction, Western Title, our amazing title and escrow team would love to close your transaction for your clients. So remember us, and if you need anything, please reach out. Thank you.
There's some reverse mortgage basics guides back there and business cards. So you can help yourself. Appreciate your time.
Yeah.
Yeah, I have the reverse mortgage white sheet that I send to financial advisors that a lot of the concept are based out of the past purpose. Oh yeah, he's got 5 of them. Yeah.
Pretty damn good.
Yeah.
If you're not, it's certified.
Right. Yep. Right. You're right. It's a good point. Probably should have brought up. Yeah, I said, I should have brought that up because from an investment perspective, it does make a lot of sense. If someone wants to make rental unit for one of the houses that they're living in, yeah.
Well, it does, you know, if somebody only has social security. And if they can get it. I went to take the money, put it in the workplace, and now you're social security and 3 other rooms.
Right.
Really.
I appreciate your time. Thank you. is out educating CPA clients. They don't have the same
Come do it for the company, and I'll be good. What's that? Yeah.
I